Have you ever wondered if interest rate cuts could actually lead to a Bitcoin price crash? Historically, rate cuts have occurred right before major market downturns. This September, with rate cuts expected, could be a pivotal month not only for stock markets, but also for cryptocurrencies. But what should we really expect from these cuts and how could they affect the value of Bitcoin? Hello everyone and welcome to our channel dedicated to the world of cryptocurrencies. Here you will find market updates, project reviews and advice to help you make informed decisions in the world of cryptocurrencies. I invite you to follow me on the channel to always be updated. This is one of the most discussed questions among investors, especially in the context of the cryptocurrency market. Bitcoin, with its inherent volatility and sensitivity to macroeconomic factors, could be hit hard, or perhaps benefit from a rate-cutting cycle by the Federal Reserve. Despite the overall positive fourth quarter for Bitcoin, September is historically one of the worst months for the cryptocurrency. Could rate cuts worsen market conditions for Bitcoin? Let's start with historical context. Rate cuts, especially in the United States, tend to occur around economic downturns. When the Federal Reserve lowers interest rates, it does so to stimulate the economy by making it cheaper to borrow and invest. However, this stimulus is often a reaction to signs of an economic slowdown or impending crisis. So while a rate cut may seem like a positive move in the short term, it is often accompanied by a worrying economic backdrop. Now, let's see how this applies to Bitcoin. Some analysts argue that a rate cut could lead to a decline in Bitcoin prices due to the increasingly strong correlation between cryptocurrencies and traditional financial markets. When traditional markets, like stocks, enter a decline, Bitcoin could follow suit. This correlation could become more apparent in September, especially if rate cuts signal greater economic uncertainty. However, there are other factors at play, such as the growing adoption of cryptocurrencies and Bitcoin's increasing resilience to economic shocks. One of the experts we asked for an opinion is Fundstrat's head of digital asset strategy, Sean Frell. Frell explained that September's seasonal volatility is a given, but it's not the only thing to consider. More important is the macroeconomic context in which rate cuts are taking place. You really should be focusing more on what the Fed is doing and how liquidity conditions are evolving, Frell said. He said it is necessary to look at the bigger picture and not just rely on seasonal trends. In short, if the Fed continues to pump liquidity into the financial system, Bitcoin could see a price increase, regardless of the traditional negative trends of September. Now let's move on to the political dimension. One of the most interesting developments that could affect the cryptocurrency market is the growing attention of American politicians towards this sector. Kamala Harris's campaign, for example, is starting to seriously consider integrating cryptocurrencies into its policies. Coinbase's chief legal officer recently revealed that the Harris campaign has been working closely with Coinbase to develop cryptocurrency policies. This signal could be seen as an attempt by Harris to appeal to the growing pro-crypto electorate, which could have significant implications for the cryptocurrency market, not only during the election, but beyond. On the other hand, Donald Trump has been much more vocal in his support for cryptocurrencies during his campaign, proposing concrete policies such as the firing of Gary Gensler from the SEC and the appointment of a new president who is favorable to the growth of the crypto sector in the United States. Some argue that a Trump presidency could create a more favorable environment for Bitcoin, with fewer restrictive regulations and a clearer path for the cryptocurrency market to expand in the United States. Despite this, Frell stresses that it's not just about who the next president of the United States will be. Cryptocurrencies will face a period of regulatory uncertainty, regardless of the election outcome. In this context, the legislative proposal FIT21, currently under discussion in the Senate, could provide a more defined market structure for cryptocurrencies, protecting both investors and consumers. If this law is passed, it could provide greater security to the sector and contribute to sustainable growth. Speaking of growth, What's next for Bitcoin and other cryptocurrencies? The last quarter of the year has been generally positive for Bitcoin, with many analysts predicting a rebound after September. However, global economic uncertainty, the presidential election and the Fed's decisions could create volatility in the short term. Frell recommends that his clients keep some liquidity on hand to take advantage of any price declines, but remain confident in the long-term growth potential of cryptocurrencies. In conclusion, September's rate cuts could create more volatility in the cryptocurrency market, but we must not forget the bigger picture. Bitcoin has demonstrated an ability to withstand macroeconomic shocks in the past, and with the right mix of liquidity and regulation, it could emerge even stronger. Additionally, the presidential election and the evolution of crypto politics in the United States will play a major role in determining the future of Bitcoin and cryptocurrencies in general. With that said, thanks for following us this far. Don't waste your next crypto flight. Thanks for being with us. If you want to stay updated on the latest news in the crypto world and not waste a crypto adventure, hit that follow button and activate the bell. Ready to go? Then see you in the next video.